Alright, welcome back to the LPR Trading Group YouTube channel. We've got another video for you today. As you know, we trade the markets and we traded the markets today. At the start of today, the opening range on the market was relatively sluggish. It was tight. The market wasn't showing very much excitement for the first 30 or 40 minutes. So what do we do naturally? We sat on our hands and we waited for an opportunity for us to execute a trade. There are going to be days where the market does not present you opportunity, and that's fine. You have to recognize it and be able to sit on your hands. So that's what we do. As we know, when we're traders, we don't get paid by the hour or paid by the job. We have to sit around and wait for the market to give us the opportunity in order to pay us, and that's what we did today. So if we have a look at ES here, we'll look at ES on the 1 hour chart. So we'll check out the 1 hour chart here on ES. We've got this big trend line here down below, maybe better on the daily. I'll show you guys. So we've got this big daily pressure cooker that we've been looking at. It broke yesterday. It's trading under it today. So we're trying to figure out if the market's going to reclaim this channel it's been making, or if we're going to start trading below and possibly going sideways or start rolling over a little bit. So this is sort of big picture idea for us for the market today. We look at the 15-minute chart right here. We do have some very nice 3 hour supply. And we were holding value within supply here, which is beautiful. Buyers stepped the market up here, and we're holding value inside of supply. So what I said off the open was, if we get a morning wash below these consolidation levels here, and then price gets sucked back up into supply, we can look for a scalp long to the upside to get through supply and possibly hold value over supply to our next level at 𝗂𝗂𝗆𝐸8.75. So we ended up taking a trade on this off the open. After that trade, there wasn't anything really for 30 or 40 minutes, which is absolutely fine. We identified the opening range highs and the opening range lows. We like to call this the initial balance. The initial balance can be a 15-minute initial balance, 30 minutes, 1 hour. It depends on how long the market maintains this range for. So for today, we marked out the 15-minute initial balance, which is the high and low of this trading range. And the market traded within this range for almost the first hour of the market open. But what we identified was through this initial balance right here, 3-minute chart, through this initial balance right here, we identified a few things. So buyers obviously stepped up off the open. They pushed price to the upside. Every time price tried to sell off, it just turned into a pullback, and more pressure was applied to the upside. The one key factor here is, even though we're outside of supply and trading above our big sell zone, buyers could not get through this area. We could not get through high of day. They couldn't even retest high of day once it was made. That just shows me there's not a lot of strength on the buy side. Once buyers gave up, sellers got a hold of this. Sellers ended up pushing price all the way back down to low of day in about 8 or 9 minutes. So this is a huge piece of our puzzle here. This is telling us that buyers are obviously not in control today, and now we need to look for some sell pressure. Now we can't just jump into the trade anywhere. We have to absolutely find an entry where we can jump in this trade that will give us a high probability trade and put us in a high probability trading scenario. We know that our targets, our ultimate targets, are these 30-minute demand zones down here, 4, 5, 6, 7. So any trade that we get, we're looking for 2 or 3 to 1 R from entries, wherever they might be, all the way down to demand. So the trade that I took on this, I called it 2 trades, 1 trade in the chat room. I said we have a very nice drop, a set of basing candles, and we're anticipating another drop. You can take the break of this candle and you can put your stop over the highs, and that'll give you sufficient risk versus reward down to the 30-minute demand zone. This is a textbook trade. The only issue with this trade is if it doesn't work right away and price drops below low of day and reclaims low of day, that means sellers are trapped, buyers got stopped out, the market's put everyone offside, and now we're possibly going to move to the upside. So it's sort of a right or right out trade. The trade that I took, I focused on the 1-minute chart, and I don't usually trade the 1-minute chart, but in this instance, I just flipped over. I waited for the low of day break. We have 2 tests on the low of day, a beautiful lower high here going into the breakdown. So this is like your M pattern or whatever you want to call it, a basketball pattern, putting pressure on this flat bottom breakdown. As soon as we break down, we get a retest of the breakdown level right here. Buyers, no presence. Sellers are still in control. They start pushing price down. I buy puts right here. My stop's over this pivot because if it's going to work, it's going to work now. It's not going to come back and mess around. And I got a partial about halfway between my entry and the 30-minute DZ, and then I took the rest off right here. And that was the trade we have for the day. The most important thing about this is the patience it took to let this trade evolve and work out. We did not put ourselves into a situation where we were going to execute trade after trade after trade and possibly lose. We don't want to put ourselves in 50-50 coin toss when we're in trades or when we're getting into trades. We want to make sure we are getting into trades that are going to give us a high probability of the trade working out and give us extreme edge, as well as very good risk versus reward. So that's what we did today. I was on voice in the chat room. We called this trade out and it worked out beautifully. I'll actually show you some of the chat right here. So we're talking about market adaptation here is very important. So buyers are really trying to hold value up here. This is when we saw buyers holding value to the upside. I was waiting for a high of day break and then a rejection on the high of day to fade this, which would have given us a much better entry for the fade that we had today. We can only plan so much, and then the market's just going to give us what it's going to give us. It's just that simple. So we started recognizing that we were going to roll over. This is where I sold the puts right here, right below this low of day on the retest, and we rode this all the way down to that 30-minute zone. Why this becomes so easy is because in the chat room, we like to plan the trade and trade the plan, and that's all we do. No trades really come on the fly. You have this big base idea, but then you adapt as the market's evolving. It doesn't mean you're going against your plan. It still means you're planning out the trade and you have a very good idea of what's going on, but it gives you some sort of, it gives you steps to take, or it gives you a process to take while you're executing the trade to make sure you're always executing in a high probability situation. Trading without a plan is going to drag emotions into play. You're going to oversize your risk on trades. You're going to take too many trades. You're going to take bad trades. You're going to take good trades. You're going to be lucky. You're going to be unlucky. If you want to trade like this, I recommend you just go to the casino, get $1,000, toss it on the roulette table, and hope for the best. Save all the headache of sitting on the charts and studying trading. If you guys want to check us out, check the description below. All the necessary links you will need are in the description below. And as always, like, comment, subscribe, and let me know if this video helped you at all, because there's many more to come. We'll talk to you guys soon.